You're at the car dealership. You're about to sign the papers, and the finance manager looks at you and says, "We need to see some proof of full coverage before you can drive off the lot."
It sounds like a single, simple policy you can just check off a list. But here's the industry secret. There isn't actually a policy called full coverage.
Wait, so if I call up an agent and ask for full coverage, what am I actually getting?
You're getting a bundle. Think of full coverage as a shorthand term for three very different types of insurance working together: liability, collision, and comprehensive.
Okay, so it's like a three-legged stool. If you take one away, the whole thing falls over. Let's break down those legs.
Leg one is liability. This is the only part the law actually requires. It doesn't fix your car. It pays for the other person's medical bills and their bumper if you cause an accident.
Right. Then leg two is collision. This is what covers your car if you hit another vehicle or a stationary object like a pole or fence.
And leg three is comprehensive. This is your safety net for everything else: theft, vandalism, fire, hail, or even hitting a deer.
So when a bank requires full coverage, they're really just making sure that whether you hit someone or a tree falls on the car, their investment is protected.
Exactly. But here's the big question. Is full coverage always worth the extra money?
If I'm driving a brand new SUV, definitely. But what if I'm driving a 10-year-old car that's already paid off?
Then you should use the 10% rule. If the annual cost of your collision and comprehensive coverage plus your deductible is more than 10% of what your car is worth, it might be time to drop down to liability only.
So if my car is only worth $3,000 and my full coverage costs me $500 a year with $500 deductible, I'm basically paying $1,000 to protect $3,000.
Exactly. At that point, you might be overinsuring a car that isn't worth the premium.
The bottom line, full coverage is great for peace of mind, but it isn't a one-size-fits-all deal. You need to check your car's value once a year to make sure you're getting your money's worth.
And the best way to see how that math works for your specific car is to visit cheapinsurance.com.
You can swap between liability only and full coverage in just minutes to see exactly how much you can to save by adjusting your policy.
Knowledge is the only thing that actually lowers your risk. I'm Jacqueline.
And I'm Tito.
Don't pay for more than what you need. We'll see you at cheapinsurance.com.